Hey guys, how's it going? Alright, I wanted to do a quick video during this Thanksgiving holiday for those in the United States who are celebrating and want to look at the S&P right now. The S&P and the Dow have been rallying like crazy, and you could say it's the Trump effect and the change in sentiment. I wanted to look at the change in sentiment and then show you a graph. Billionaire Drunken Miller says he's quite optimistic betting on economic growth. Now, Drunken Miller, like 6 months back, he was saying sell everything, buy gold. So that's interesting. A billionaire hedge fund guy sentiment has changed because of Trump. And if you want to look at Bill Ackman, he's extremely bullish on Trump. So the hedge fund guys, right, the fast money guys, they want to be investing or they want to be putting their money in. While what I've noticed on the other hand, other professional investors, traders are like, hey, you know what? The market may go up next year. We just got to see what Trump does. But it just seems that there's a sentiment change. Because of the sentiment change, let's hold on until we see more data come through next year and what policies are going to be implemented next year. Regardless, I wanted to show you this one graph. It's at stockcharts.com, and in my opinion, it takes the emotion out trying to analyze the market. And I'm looking at this ratio, the VXV divided by the VIX. The VXV is the 90-day volatility index, and the VIX is the 30-day volatility index. I like looking at volatility because part of my strategy is to sell deep out of the money options in the S&P. Yes, I'm hedged, but I need to look at volatility. The higher the volatility, it's better for me to sell options. But this volatility index could also give me an idea of better entry points of buying and selling, right? Once again, this is you shouldn't follow this once it hits the ratios that I'm going to mention, but it may give a better indicator of when to go in, when to sell, and maybe when to stay in cash, right? Or just wait for a better opportunity. And those individuals have come up with every time this ratio is around 1.2 or higher, it implies that the market may be overbought. While if the ratio is below 1, guess what? It may be a better time to buy the market. And we could look at different instances over here. We have an outlier over here. It's below 0.60. This was the August crash of last year, right? Right around the time that I got married. I remember this crash. Now, if you want to look at over here, right, the ratio is less than 1, and this was the Brexit smackdown. Want to look at some other times? Look at this, right? This low of like what, 0.87 was when Donald Trump was and Hillary Clinton were going at each other. This is the post this was before the election night. And what happened afterwards? This ratio now has gone up to 1.22. Yesterday I saw readings of 1.24. I don't see the exact numbers right now because right now I'm not looking at the actual market. But you can see the last few days it's been over this 1.20 mark. And what I've noticed is a lot of some traders that were bullish all year have been turning negative. And you see the retail crowd been buying up this dip, the hedge fund crowd buying up this dip from right over here. So there's a lot of people saying that, hey, you know what, maybe we should be taking some profits now, while the retail crowd may be like, hey, we should still buy. I missed this rally. So what I'm looking at right now is probably going to be some maybe sideways action, but then we get some events going on. The Federal Reserve is going to meet the 13th and the 14th. Most likely the rate is going to go up. And with the Fed funds rate, I expect a little more volatility to come through. But even though we don't have volatility now, and I'm saying we're going to have volatility most likely after the Fed funds rate goes higher, next year is going to be a bit interesting because Donald Trump is going to meet with Congress. And in Congress, they're going to be fighting over spending, right? The Democrats and the Republicans fought over spending. And then they stopped fighting the last few years. To the extent, if you compare to like 2011. And I felt that they don't want to go through that again. And then Donald Trump is a stubborn guy, remember that. And even though he's going to work with the Republicans, there may be some conflict because Donald Trump wants infrastructure spending. He wants to build a wall, which many people in Congress probably don't want to see. So there's going to be conflict, and in my opinion, they're going to come head to toe in terms of a debt ceiling debacle. Now, the sooner that it gets resolved, the less volatility, but the longer it goes on, volatility is going to go higher, and in my opinion, the market's going to go down with it initially. So this is just me observing as the market as of right now, though, seems to be overbought. I wouldn't be surprised to see more sideways action, but we need a pullback. Like, if people are really bullish on Trump, if he does really implement pro-growth measures, I think those individuals wanting to put money in the markets right now, I think maybe it's time to take a breather, step aside, and then wait for a pullback. And then if you're an aggressive investor and you think Trump's going to make this market go higher, then it may be a better idea to do so when this ratio goes below 1. So even though this ratio goes below 1, right, you could see sell-off like you did in August. Or if they're typical sell-offs, right, it's not going to be as bad as this one. And who knows, below 1, maybe a better time to buy. But regardless, guys, let me know what you think. Are you buying the market? Are you selling the market? Are you buying gold? Are you selling gold? In terms of gold right now, I don't know if I mentioned this the other day, but I said that I bought some Goldie micro futures. I was planning to buy more, and I'm waiting for this euro freak out to occur, the Italian referendum. If gold goes down after then, I'll wait a little bit more, and right before the FOMC meeting, if gold goes down like $30 from now to maybe 1150, 1160, I want to add more to that Goldie micro position. I did buy the GDXJ today as well. Just added to some of the other positions that I bought. So should be interesting. When the Fed does raise rates this December, that's how it's looking like. My feeling is the dollar is going to reverse, go down. Gold price is going to go higher, just like you saw last year. And I explained that in the last video. But regardless, leave your thoughts below. I'll talk to you later. Bye.